let's move to the second point, by the way, about what accounts for the difference in levels of success between system developers. So you've mentioned market cognition already as potentially one, and process, which I think we're going to talk about in a little bit. But is there something else that you like to use personally that can really be a difference between successful and unsuccessful trading models?
Yeah, well, there's that a very similar to market cognition, which is meta strategy cognition. And this is the idea that if you can identify when the back test is, or when the results are lying to you. So a simple example of meta strategy cognition, or a trivial example, would be knowing that limit order strategies don't tend to do like they did in the back test. That's a very simple, because most people know that. But maybe we could take that to a different level. So for example, let's imagine that you build some different strategies. You build some day trading strategies. You build some swing trading strategies, and you build some intraday strategies. And let's imagine that your intraday strategies, no matter what the back test tells you, they don't do well going forward. Well, you can use that meta information to guide your decision-making process, your strategy decision-making process. And of course, the difficulty of that is that you need a lot of experience. And I would also add, doesn't necessarily the data you develop or you discover doesn't necessarily apply to other developers. It would be unique to you what you discover, because maybe they do things a different way. But even if you know that, hey, when I run this, do a process in this way, it looks good in the historical, but it don't do good going forward, then that's something that you can use in the future to either say, okay, on these strategies, I'm going to be more cautious of them, or I'm going to require even more rigorous testing, or I'm just not going to do those strategies.